We talk a lot on this channel about the different types of investments, but not so much about how and why investing actually works over the long term to set you financially free. Compound interest is the secret to why investing works.
Today we're going to apply the theory of compounding to realistic monthly saving amounts to demonstrate how investing small amounts over time can make you very wealthy, even a millionaire. Let's check it out.
Welcome to Money Unshackled, the investment channel that sets you and your finances free. This is Andy, I'm Ben, and if you like what we say, be sure to hit the like button and click subscribe.
Also, if you want to support the channel and get rich in the process, then check out some of the affiliate links in the description below where we've listed loads of cool stuff that will help you become financially free, even including a £100 cashback bonus when you sign up to one of the peer-to-peer platforms. Let's get into it.
Compound interest, how it works. Compounding means building on top of what you've already built, making interest from your interest. When you earn interest or dividends from an investment, you should reinvest them. You keep doing this until your portfolio starts to snowball in size, and you can help it along the way by topping it up every month with regular monthly investments.
Savers are losers. Compound interest is very powerful over the long term, but you need to make sure that you're earning decent, positive returns. The problem of holding onto your money or even putting it into a bank account is that you are earning negative real returns due to inflation.
Let's run the numbers in a worked example. If you save £100 a month for 30 years, you might reasonably expect to have £36,000 at the end of it. But £100 a month put under your mattress for 30 years will incur the wrath of compounding against you.
If inflation is 3%, you are effectively losing 3% every year until you end up with only around 24k after 30 years at today's value. Let's see what happens if we put that money into a bank account instead. In modern times, banks will offer you a joke rate of return around 1%. This is less than inflation, meaning you are still losing money while holding it in the bank. Let's now break through the inflation barrier into investment territory.
Here we see what happens to our £100 if we invest them every month for 30 years in the stock market. We've assumed a modest stock market return of 7%, or 4% net of inflation. And that's more like it. Look at the power of interest compounded over time.
Warning! Remember that in order to achieve the superpowered portfolio growth, you need to be reinvesting all of those returns, no using them yet to support your lifestyle.
Looking back at that modest portfolio return, we can't help but wonder what would happen if we were to increase the amount of our monthly contributions or invest in stocks and other assets that gave us a higher return. Could we use the power of compounding to make ourselves millionaires?
Example 2. Increase risk and returns. We have shown in a previous video how it is possible to make 20% plus investment returns in property. But it is also possible to make these excellent returns in the stock market if you are an excellent stock picker.
Let's assume that you are not this good but are still better than most and can achieve a return of 15%, which is still high, which you could in theory do as a skilled investor. Let's now see what happens with this higher rate of return. Awesome! After inflation, our return is 12%, and just look at the impact it has had on our portfolio. Compounding adds more cash to your portfolio for every extra crumb earned, meaning that for every extra percentage rate of return that you can make, your portfolio is amplified by massively more. So maximise those returns.
Example 3. Increase your contributions. Here's where we were at £100 a month, having made wise investment choices. Just look at how pathetic that bank account return is, by the way. Now let's see what happens if instead of investing £100 a month, we'd been able to get a pay rise or had a side hustle that allowed us to instead invest £350 a month. And there you have it, retiring with £1 million, and that is after inflation. The true size of your pot would be inflated at £1.8 million in 30 years time, but that would be worth £1 million in today's money. Congratulations, you're a millionaire.
Slow and steady wins the race. Eventually. We're all for having a comfortable retirement, and compounding will get you there. But our objective is to retire young, before compounding can really kick in. You don't need £1 million when you're old at the expense of living now.
Maybe you don't need to accumulate a pot worth £1 million. Perhaps you can build up a large enough pot so then you can start living off some of the investment returns while investing some of the rest. The best of both worlds, perhaps.
Question of the day. Are you on track to becoming a millionaire? Or will you be financially free before that point? Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is Money Unshackled. See you next time.